Kids are out of the house. You're approaching retirement. Your insurance needs are about to shift in ways most people never see coming. I am Ron Siegel, certified liability advisor, helping families build wealth through strategic debt management. I was on a Zoom call last month with a couple, empty nesters, both in their early 60s. They'd been so focused on paying down their mortgage that they hadn't thought about their insurance strategy in years. Here's the thing. When you're in that empty nester phase heading into retirement, your insurance needs don't disappear, they shift. And understanding that is part of having your financial house in order. Let me walk through what actually changes. Home insurance. First, your home. Whether you have a mortgage or not, you need to protect this asset. But here's what most people miss. The policy you bought 20 years ago is probably way outdated. Your home's replacement cost has changed. Your belongings have accumulated. This is actually the perfect time to review your coverage and make sure it matches your current situation. And while you're at it, check those deductibles against your financial situation today, not what it was when you first bought the policy. And here's something most people don't think about: umbrella policies. You've built up assets over the years. An umbrella policy protects you against personal liability claims that could threaten everything you've worked for. It's not expensive, but it can save you from financial catastrophe. Health insurance. Let's talk health insurance because this is where things get tricky. Retiring before 65. You've got a gap to bridge until Medicare kicks in. If your spouse is still working, getting on their plan might make sense, but you likely need to wait for their employer's enrollment period. Otherwise, you're looking at private coverage or the marketplace. Not ideal, but you can't go without coverage. One medical emergency can wipe out your retirement savings. Once you hit 65 and get on Medicare, here's something important. Do not try to navigate this alone. Medicare has so many options, so many moving parts. Part A, Part B, Part D, Medigap, Medicare Advantage. It can be overwhelming. The good news, there are professionals who specialize in helping people navigate Medicare, and they're paid through insurance companies. No cost to you, zero, nada, nil, zilch. They'll walk you through your options, help you understand what coverage makes sense for your situation, and make sure you're not leaving money on the table. Medicare Part D helps with prescription costs. Medigap insurance covers what Medicare doesn't. The sweet spot for getting Medigap is within the first 6 months of turning 65. That's when you get the best rates and most choices. But figuring out which plan works best for you, that's where having someone in your corner really pays off. Disability and life insurance. What about disability insurance? Once you stop working, you can drop it. The need is expired. But life insurance, that's more nuanced. Sure, the kids are grown. Some of those obligations that drove your need for life insurance might have changed, but new needs might have emerged. Estate planning, creating liquidity for your heirs, leaving a legacy. Maybe you want to make sure your spouse is taken care of or leave something for your grandkids. The purpose is shifted from protection to planning. Extended care. Here's the big one most people avoid thinking about. Extended care insurance. With the kids out of the house, you can focus on protecting yourself against potentially the biggest expense you'll face in retirement. I'm talking about long-term care costs, whether it's home care or a nursing facility. These expenses add up fast. And here's what catches people off guard. Medicare does not cover the most of these costs. This is where that safety, liquidity, and return framework really matters. Extended care insurance protects the safety and liquidity of your retirement assets. Speaking of liquidity, this is exactly why keeping equity trapped in your home can be so dangerous. You need accessible resources to handle unexpected costs, and extended care is one of the biggest. Practical action. So what does this mean for you? If you're in that empty nester phase or approaching retirement, now's the time to do a complete insurance review. Not to cancel everything, to make sure your coverage matches your current life stage. And look at your homeowner's policy and review those deductibles. Check your health insurance options. Consider umbrella coverage. Evaluate whether you still need life insurance or if the purpose has changed, and don't put off the extended care conversation. And when it comes to Medicare, get help. Don't try to figure it out on your own. There are professionals who do this every day, and it won't cost you a penny. Remember, insurance is part of your overall financial strategy. It's not just about protecting against loss. It's about protecting the wealth you've built while maintaining the liquidity you need to actually enjoy retirement. Bottom line, the goal here isn't to sell more insurance. I don't sell insurance. It's to make sure your coverage aligns with where you are now, not where you were 20 years ago. Strategy beats rate always, and having the right insurance strategy in place is just as important as managing your debt and building your assets. Want help reviewing your overall financial picture? Head over to rsrlinks.com/keysteps to access our financial house in order tool. I am Ron Siegel, your certified liability advisor, helping families build wealth through strategic debt management. That is the Borrow Smart segment, brought to you by GetHomeSelect.com, GetHomeSelect.com.